This is Justin Pulitzer. This is my weekend review for Sunday, September 25th, 2016. It is, however, being filmed on Saturday, the 24th. Very busy week. We had some Fed info, Fed decision. I'm going to cover that quickly, but I don't want to focus too much on it in this video. If you're curious about my analysis on the Fed, check out my Periscope from this past week. The link to that will be in the description below, so if you expand that and click on it, you'll be able to see the video. I basically summed it up as this, is that the Fed, I wouldn't say they quite moved from dovish to neutral, but they moved to what I would call neutral light. So if you picture it kind of like a gas gauge, they went from basically 0 to maybe a quarter of a tank instead of the half a tank, which would represent the full neutral position. They basically said that they see the outlook to the world and the economy going from basically negative to more balanced. We know that that's not really the case. The data has been terrible, but they paid it a little bit of lip service. I think they want to keep the December meeting alive. So that's sort of my take on it. The statement in itself, I read it cover to cover, was fairly dovish. You also had a BOJ decision where they didn't come out right and do QE, but they pegged the rate at 0, and they're going to basically keep it there. Initially, the market didn't take that as being so dovish, but it quickly reversed and was taken as dovish. I see it as dovish. So that's my analysis. If you want the more in-depth view, again, watch my Periscope. Let's dive right into the market keys, get into the major market indices. I'll talk about some stocks that were in the news this week, and then get into some of the momentum names that we talk about and pepper in a few new ones as well. So the VIX here is doing what I had discussed it doing. I think we're in one of these types of situations where it's going to be rocking between the lower end of the range, which we got to here. I don't know if we're going to fully get up here to the 20s, although that is possible, but it wouldn't surprise me to see it come back up into like the 16s or 17s and maybe get another trend line touch. You can see volatility has been in a downtrend for a while. We got a backside of the channel test here, which rejected quite soundly. I mean, this is about as ugly of a bar as you can get, and you can see we're back down to the end of the range. So down here, it starts getting a little iffy, and, you know, volatility has the potential to pick back up. I don't know if it would take this long to get back up here, but we could potentially see, you know, these 16s and 17s again, really, and not be that big of a deal. Pure directional play where we are here. The dollar. So the dollar has been in a downtrend for a while, though we've been in an uptrend, kind of within a downtrend. Let's keep it simple. I said that there was a potential here for a head and shoulders. This is not quite negating it, but it's sort of like a lumpy shoulder. This has a potential here to be a secure low. It's not really at the end of a range, so I don't know. I wouldn't factor it in as much as something like a move down into this area where you could kind of say that these 2 days were almost a bit of a secure low and then it was back up. This is sort of mid-range. There's really nothing to talk about here. You can see the 200 MA here was support. It became resistance here, and we've been unable to clear it. So I don't think that there's that much to kind of get worked up with the dollar until the 200 MA is cleared and then the channel high is cleared. If that is the case, then I think we'd see the 25.23 rather quickly and potentially this channel high, which would be moving the dollar from a bearish position into a bullish position. If that starts happening, the market will not like it. It is also possible that this is just building a bear flag and that the pattern breaks lower. So I really need to see what's going to happen here. If we clear these highs, this right shoulder, and invalidate the head and shoulders and clear the 200 MA, then I'm a little bit on a more of a, I don't want to say a war footing, but a cautious footing for the market. And if this were to break, maybe we finally are going to get, a dollar breakdown. The bonds. So the Fed was, like I said, a little bit more dovish in their statement. I didn't take it as hawkish. Clearly the market didn't either. It was basically closed on the high of the day of the Fed and then kind of gapped up and has held the last 2 days. We got a 61.8 test, minor bounce, a look below and fail, and now back up and into the gap. So not that much to say except that, I think that the market is sniffing out a little bit of the lower for longer. It is always possible that this comes down and gets a 200 MA test, which is roughly the channel low. But to me, this looks like it's just going to be choppy for a while and it's going to consolidate. We are below this consolidation range. But remember what I said about PE multiple ratio premiums. You don't really need the bonds to be in rally mode. You just don't need them to be in dump mode. Sideways is fine. That kind of keeps the dream alive. HYG. This is the high yield, right? The kind of the more iffy type of debt. This is when oil was kind of in free fall. I think that a lot of the oil producers have hedged out a lot. Just to jump back into the kind of the Fed for one brief second, Janet Yellen mentioned she thinks it's kind of stabilizing. So that is part of the thesis. Like if this were to kind of, we'll get into that more with oil again, but if this were to fall out of bed, I think that would further put the Fed on hold. We're back basically near the highs. You have kind of a little bit of topping tails into this reference area, but still above the 50 MA, above the channel. We never got the full backside test. So I think really as long as this 100 MA kind of holds, things aren't going to get too crazy. If we start losing the 50, then the 100 might be in play. But this seems like it's just going to be chopping for a bit in range. I don't really trade HYG, but I do like to use it as a gauge for kind of market sentiment. This was sort of looking like it could be forming a mini head and shoulders, but we're too close into the head here. I'd say that pattern is invalid. I think it's just going to be choppy. And we're back, you can see back above the trend. So 50 MA, let's keep it simple. As long as 50 MA holds, things are hunky-dory. If not, we're going to see 100 MA and maybe the backside of the channel test. The aforementioned oil, and look at me showing off my fancy vocabulary here. Spelling bees champions are us. Anyway, this was, like I said, looking like it could have been forming a bit of an inverse head and shoulders. We've now had a touch here, and we're in a bit of a wedge that's descending. There's supposed to be an OPEC meeting in Algeria. The Saudis already came out and kind of dispelled, I think the Iranians too, that there's not going to be a production halt. 50 MA here is kind of key. We're basically on it, maybe a smidge below. If we start losing these double bottom lows here, like 43s, then things could get a little dicey, I want to say. We are in a bit of a down channel. We're still in an uptrend, but a down channel within an uptrend. And if we start losing the 43s, I've said for a while, 42, 49 is the key. If we lose the 43s, this probably will not hold. At the very least, I think we'd get a 200 MA test, but it could get a little dicey. You see the 200 here has been roughly been support. That must hold. If that gets lost, we could be sniffing these fibs quickly. The 50% fib would be a retest really of here, and a 61.8 could even take you down to 35s in the channel low. Needless to say, if that is to happen, the market would not be happy, and I would think that this, though, would continue to say that the Fed is on hold. They talked about drillers being stabilized. Keep in mind the rate of change was slowing and now halted. They are not adding any more on, and that could easily reverse again if oil is to reverse. If this trend here, these double-day highs here, this two-day high, 46.52, and this one was 46.55. If these two get taken, I think we fill up the triangle here to the 50s and maybe even higher rather quickly, because the sentiment that I've heard from traders is that they all kind of know, quote unquote, oil is going lower. And if it does something like surprise to the upside, it could be kind of a vicious squeeze. A couple of things. XLE, what am I looking? I'm not really looking for kind of the short here. I'm looking more to kind of BTD by the dip. But this could easily come down to the channel low. It's a very mild channel, and the 200 MA is down here. So I kind of like put ratios, buying these and then selling 2 times out of the money, more near dated for a play down to there. But I'd really be more interested in actually waiting for it to come down there and then like selling gap fill 50% fib, or maybe, if it overshoots a little, sell the 61.8s, which is down near these kind of these 58s. I'm looking for a move back into this to kind of look to get long. This kind of got close to where the real breakdown took place, and I think this is just some responsive selling. The price action here, clearly you're in a bit of a downtrend, so if you want to play for the momentum to the upside, you need to see this kind of last swing high clear, which was 69.46, which would be a play back to the upside, or looking to kind of buy it down near the channel low, 200 MA, and this reference range low. Considering we came from the high, I think that there would be a lot of panic down here. Everyone, I think, would assume that the range is just going to snap. Keep in mind, we'd have been coming down from the top, and I think it would at the very least support for a bounce. I'd like to sell near dated, out of the money puts into that move if it is to come down. Exxon, I started very, very small, nibbling into these 43s. I actually, I think it was this day that I sold a little bit of puts into. I did a measured move. This is about $9.97. If this were to come from this high down to here, that's $79.40. We have a range here from this pullback low to this high. The 61.8 is roughly around 81s. 83s, as I've demonstrated in past videos, is a very key level. I think that is key. If this can hold, it's sort of that would be it. So like if we can get back above this day's high here, which was 84.55, then I think the trade is back to the upside, maybe to 87s. If you were to lose this 4-day consolidation below 82.31-ish, then I think we're going to see that 61.8 fib and 81s and maybe press into the channel low here, close to like the 80 and the 79.40 level, where then I'd be interested in selling more out of the money puts and kind of bring my position up more to full size. So that's my take on Exxon. China is obviously very key to the whole global view of the Fed. It's been behaving, so that's what they've been, Brexit didn't tank the market, and China has been behaving, so, it's kind of like, quote-unquote, okay. I'll talk about BABA in a little bit, but China here, there's always the risk that it comes down to the channel low. I would be looking to be a buyer on tests of the channel low. The 200 MA here was very hard to sustain. Above, you can see all these little attempts. Finally, it got through it. I have my fingers crossed for a retest of the 200 MA. Look where this kind of real breakdown took place. This is all starting to bend back up. The 200 is flattening. The 100 is now in an uptrend. The 50 is in an uptrend. I usually like buying things on dips once that's the case. The 100 MA is roughly around the channel low. So if there were to be any type of panicky move, I'd be an interested buyer. As this rallies, though, we're getting into some resistance. So, the risk reward to me is getting a little more iffy up here. You're basically kissing into 38s, close to the 40s, so you got to, I think, book profits on pops, but I'd be looking to be a dip buyer on that. The BABA, so it's behaving okay. I talked about a long play on the break over the high here. I talked about 104s, promptly got a pullback to retest, and now making new highs. Yeah, I mean, I think Baba's kind of I had said I thought we would see the 110s. We got really close, 109.76. So there's really not that much. Let me try. Yeah, we're in a long enough time frame, I think. There's really not that much here technically to prevent this thing from getting up to the 120. But if you haven't taken some profits here, don't get too greedy. I like the idea of booking some profits on rallies and then kind of reloading on dips. That's my view. I'd be looking to kind of I talked about booking. I'd be looking to adding back into profits, maybe even into the trend line. I mean, this would be a pretty large pullback back down to like these 98s, but I'd be interested in selling some out of the money puts if we were to get back down, that low. But like I said, I think that this is more on the rally type of mode at this point. As long as we're above these 104s, 110s are in play. So, which we basically kind of close enough for government work. Let me zoom in here a little bit. I want to show what I'm talking about. Like if this, let's say we were to have a multi-day pullback into like the this region, I think it would probably be a quick buy. But like I said, I'm more looking now to book profits in BABA on pops than kind of chase. It's really run quite a bit. Right, that's the BABA. IBB. So you may have heard we have a presidential debate coming up on Monday. Hillary Clinton, Trump also have been a little critical of these companies, like the Mylins, the like that guy Skrelly for a while. All these price hikes. This is basically kind of hanging around the top of range. We are making some higher lows and some equal highs. So if Trump were to win the debate, I think that this would continue higher. I'm going to talk about something else that I don't think people are paying so much attention to, that I think will kind of crystallize some of this move. But it seems to me like IBB is improving a little bit. This could get a channel high move. Yeah, that's really where these references are. So this could get to the channel high. I've said 315 is possible, but if Hillary Clinton wins that debate and things don't go so well for the Donald, this could pull back even to the channel low. But I'm starting to think that this is the rounded bottom, and I'm more into the since we took out the 89s, had a kind of a channel test back to the breakout and then back up. To me, I think we're in buy the dips mode in that. Something else, this Gilead, this has been a bow wow for a while, this stock. However, we broke the channel here in a bit of a professional gap Maribozu type of candle way right into the resistance. But look, we've spent 3 days consolidating here with basically equal highs. So if you can get over this high of day here, the 82s, and the 100 MA clears, this has really been the key. The 100 MA. You can see it was a lot of resistance here when the breakdown. I mean, this is a big gap, but it did take out the 100 MA. The test back held it down. If this clears the 100 MA and these 4 highs, this could easily rally up to the 88s and fill the gap. So I'm getting a little more constructive in Gilead. I like that it's into resistance and not really backing off. If you lose these 3-day consolidation lows here of 80, 66, and the 50 MA, it's a get the F out or right out short. So there's 2 plays on this that I like. A breakdown of 80, 66 as a short, or a breakout over the 82s here as a right out long. So the Gilead is starting to show some signs of life. Speaking of Donald Trump, coal, this is the anti-Hillary play, right? I mean, she wants to put all the coal out of business. Coal is rallying pretty solidly. It's in a fairly strong up channel with the 50 MA holding. I'm actually long this, truth be told, for a while now. I've just been kind of sitting around in it. I've been waiting for a move back somewhere between 12.95 and 14.14. So patiently long with amazingly good trade locations. So if Donald performs well, I would expect coal to continue rallying. If he doesn't do so well, we might get a channel low test. So coal and biotech, I think, are going to be the plays for the presidential debates. S&P, let's get to it, shall we? 9-month daily. Wow, this just is a little intimidating even for myself. Very trying to show this in a great way. All right, so I know there's a lot of lines drawn on here. It's a bit of a messy chart, but if you just follow where my pointer is, I think things will be illuminated. So we have the danger here, and it's not necessarily, a written in stone type of a danger, but you could have one of these mini kind of head and shoulders patterns playing out here. That, like I said, not in stone and can very easily be negated. Usually when I see head and shoulders patterns, I like the shoulder to be here, the head to be up much higher, and then the right shoulder to either be equal to or even below the left shoulder. This pattern here, we've seen it before. This was the Fed day, gap up, and then a few days of pullback. That was over here. I teased this a little bit in the intro to this, like my tweets on Friday, to kind of tease up the weekend review video. The difference this time is that we're kind of more up here, like before the breakdown, than here on the kind of the ascension. I don't want to make too much of that, but let me show you what happened here. Let me delete this rectangle. No, we don't want to move it. We actually want to delete it. Remove drawing. Oh, I redrew it twice? That's not good. Remove drawing. All right, so this was the Fed day, the day I said that Yellen got religion. This was the day that really turned my view of the market. I had started to be getting a little more bearish and said that we were kind of going to start looking to short into here where the breakdown took place. I did an about face here because of the dovishness of Yellen's comments. It took some time to play out, though. There were multiple days of consolidation. You had these 2-day gap up and pull back. Look familiar? We don't have a 50 MA, though. We were well above it at the time, so that is a little bit different. But you had multiple days of consolidation and about a $4 from high of range to low of range pullback. If that were to happen, and we did get that pullback, that would roughly take us to the 212s again, and potentially the channel low. The bad news, if that were to happen, if we lost the 100 MA here on the, it didn't touch on the ES, but it did touch on the SPX. I don't need to show it, but just take my word for it. That's much better. It did touch on the cash. If we were to lose this like multi-day consolidation, this better hold, the 211. Keep in mind the 210, 211 area was a huge, ginormous point of contention. There's, I guess you could kind of go a smidgen more. I'm willing to kind of, when things get a little squirrely, kind of say close enough for government work, although I am a very particular guy with regard to ranges and prices. This channel low and this 211, which was really where the Brexit kind of petered out. This was the Brexit, by the way, the day before, 110.87, and then once you had the kind of the gap and go above was when things got going. This is a big volume distribution. You can see, look at this here and look at this here, and this is the channel low. This needs to hold. If you lose this, I think a lot of people are going to be bearish. You'd have made a lower high and then a lower low, really all within context of range, though. But this, if this loses, needs to hold. If the head and shoulders scenario, this mini kind of head and shoulders light plays out, and this channel does not hold, listen, I'm giving you the worst case scenarios. I want people to be prepared. If this were to give out, a measured move to kind of 2 times the range here would take you down to 205.02. A Brexit equivalent move from here to here would also take you down to 205.73. The 200 MA kind of lives around here, and if we, oh, come on, let's get back into a year date. If we want to get back, look where that Yellen, remember that Yellen breakout bar I talked about was here, is roughly down in those 205s. So that, and there's also a gap fill around 203. So this to me here would be the 205, 203 is kind of the quote-unquote worst case scenarios. In the meantime, and I'm not saying that's going to happen. I'm just preparing people for, potentials. What seems more likely to me is that this may pull back a little bit more, and I'm going to go into ES in a minute and show some more nuanced points, and then kind of hold. Keep in mind this week, this hasn't been a great quarter for hedge funds. We know about Ackman, we know about I don't know. You pick it. They have not been performing well, and I think that there could be some window dressing now that the Fed is sort of out of the immediate way, and there could be a move back to the upside. There could be a rally. This gap could easily fill to the 218.5 and get to the old all-time highs. At some point, this likely will fill. This to me just seems like we moved up a lot, looked into the gap, and now kind of pulling back a bit. This low here was very important to me, 216.03. It's a little discouraging on Friday that we closed at 215.99. I think that that's really more related to options pinning, so Monday is going to be key. If you can get over Friday's high, 216.88, the play is back to the upside for a move to these 218s. The measured move, expected move for this week, and keep in mind, I discount this more for when the move is down. They tend to be larger, particularly when IV is low. But when it is to the upside, when IV is low, I think it's more accurate. That would take you up to 218.79. So roughly the move above the high here would get the gap fill. If you lose the low and you do the, take the measured move here of the roughly $2.80, that would at the minimum be down to the 213. So the measured move, like I said, would be roughly around there. So this is a big point of contention between 211 and 213.78. If this holds again, we're just in range. Granted, again, from lower highs, but again, a range play. I think moving from the top of this range down to the low would probably not collapse as easily as maybe people think, particularly with the end of quarter. There hasn't been a big real run-up into the end of quarter either. Some momentum stocks have had some moves up, but that's my thinking, that we could pull into here. Let me show you on the ES. /ESZ6. So we need to zoom in. 4-day, 15-minute ought to do the trick. Yep. So from this move down to the Fed range high, there's a few things to point out here. One is the Fed day high, which was the 21.57.5. We roughly held that. If that does not hold, and these lows are kind of poor, when I talk about not auction ending excess, when you have poor lows, it's possible that there is a back off first where there's a move up before the repair. But if this were to repair early, this channel low here, roughly these lows would come into play. That could potentially hold. If this were to lose, and I do think at some point that this will be retested, I think that the Fed day VWAP and this kind of like 61.8, which is where this real breakout took place. Look at this high, this high, this high, this kind of point of contention, and then the takeoff. The breakout could be retested. So that would be roughly 21.44. I love the idea that this is near the Fed day VWAP. There could be a little bit of an overshoot to that down to the 21.42. But between 21.44 and 21.42 really ought to be, quote unquote, the kind of the worst of it. That would be like roughly a 30-point move off of the high. If the market is to stay firm and okay, this area really needs to hold. And I think that at some point it will get tested. I don't know that this channel won't hold and we won't be back off to the upside, but carrying forward these levels, this area, it was a big point of contention and really should at some point be retested. If you also want to talk about like single prints in the market profile, and I don't want to get into it, but the breakout here was really where they kind of started. The breakout over this high here, the 2146 quarter over the 47s was really where it started. So it's possible that this area gets retested. So that's what I'm thinking with regard to the ES. There's, like I said, three scenarios that I see likely here. One is that these poor lows reject and that there's a move up first before a move either, it could go higher before the repair. The repair, a channel low hold, which is roughly around these, the 42s, 43s. I'm sorry, 52s, 53s, also the edge of this volume distribution. So this needs to hold. If this gets lost, look where the next volume, the big high volume node, this area is a very open space. It would come down to the 44s to 42s, and that area to me would be an amazing area to cover shorts if you're short, and to either to flip right or right out long, or to sell very near dated same week out of the money puts. So that's my thinking on the ES, the potential downside. Upside usually takes care of itself, but now you know where I'm thinking with regard to the downside. By the way, the market maker expected move this week is 33.18, so that's roughly consistent with that move if it goes down there, or a move back up, if the move were to be up, maybe to the channel high. This move, this was when Apple, and I'll get into Apple, kind of broke, the news broke, but this was a really lethargic move. The breadth was not there. There wasn't a huge amount of volume these days. The pullback has been very begrudging. It's very, it just seemed to me like some profit taking, people taking some profits, and getting, I don't want to say short, maybe a little short, but taking some profits ahead of the weekend. The 50 MA here on the 15-minute has been the kind of the resistance. So a move back over there, I would say the move is back to the upside, but anything below there to me still remains vulnerable. Other indices that are a little more encouraging, IWM, let's go 9-month daily. Look at this. We're not even into the gap. The gap filled in SPY, right? This held. It was an inside day. So, yeah, I mean, as long as this 50 MA really holds, the pullback to me is still kind of quote-unquote okay. IWM, if we're looking for a right or right out play, let's keep it simple, stupid. Anything below the 2-day lows, 124.66, is a short. Anything above 125.88, the 2-day highs, is a long. Really, really simple. Doesn't get much more simple than that. Qs also holding up fairly well. Closed still above the old all-time high. If this were to pull back, I would be thinking 50 MA test again at the least. But as long as we're above these old all-time highs of 118.12, there's really not that much to see. This could have been considered a bit of a look above and fail. It's not an island reversal because this day had play with inside this bar. Like if this were to gap up and then we were to have gap below this low and kept on going, that to me would be a more significant high. This to me just seems like it kind of came up a lot, kind of broke out, and now could pull back to mid-range. That is very, very common, by the way. When something comes up a lot, it'll break out, move back to the mid-range here, which is roughly like the one, let me zoom in here, like these 116s. By the time it gets there, the 50% fib would probably come into play. So that's what I'm thinking, that this just moved up a lot, and it could either stay here, bounce and go higher, or pull back further into range down into these kind of 116s, 50 MA test. So those are the two scenarios that I see likely with the Qs. So some stocks that have been in the news, had some news on Friday. was Apple. Let's start with Apple. So GFK came out late day. Reminded me a lot of this day, which was when Nikkei came out and said that the iPhone, kind of similar levels, although we did hold over it, which I'm going to talk about a little as being significant. They came out and said the iPhones were not going to be that great. On Monday, there was a gap down and proceeded down. And then the earnings, they wound up actually being correct. I want to correct my tweet. I did already. I had said that, it reminded me of the hit job that Nikkei did on Friday, that Friday, which I said turned out to be false. It was actually correct. I just thought it was a little fishy how it came out late on a Friday. This is a different unit. It is not a different outfit. It isn't it isn't Nikkei. It's GFK. They are I believe they're a German company that monitors sales. Their numbers were basically Europe and Asia. It did not include the United States. And they said that they thought that the iPhone 7 sales over the 6S were down 25%. If that's true, this is going to be hammer time for Apple stock. And we know that investors are on edge a little because Apple has refused to provide opening weekend sales. Based on their website and their lead times, based on I get emails from now, and I've seen paid Twitter posts, the carriers are all back into subsidy mode. I know there are still pretty decent lines in front of the Apple store to pick up the phone. It seems to me like the 7 is probably going to do okay. The ideal scenario would be for this to actually come down, do the old shake and bake before the number, build a little fear, maybe get a little IV in there so it could sell some out of the money premium. I'm going to keep it real simple with Apple. Keep in mind where this stopped was just above an old flash crash level. I keep my levels maybe I keep them a little too long, but I believe in my levels and I keep them. Stocks like muscles have memory. I always call it muscle memory, price memory. This last reference top was 112.39. This area here, which was a point of contention, was roughly between 109.85 to 110.23. Technically, as long as this kind of area here holds, Apple is quote-unquote okay. But Apple being Apple, let's keep it really simple. We have a day here, we have a lower high, and now a bit of a lower low. So this day's range to me is the key. I like that Apple did close above 112.39 and that there is a little excess on the lows here. This could be construed as a look below and fail because it did take out these lows and close back up into it. So if we lose the low of day, the 111.55, then I think we're going to come down to the 109.85-ish, 110 area, and potentially the channel low. I warned here these days, and I was a little early. It was this day here, the 115.73. I said to start booking profits that we were into the channel high. The next 2 days stubbornly failed and came down. These are kind of bearish bars. You held this area once, bounced, and now back down again. If you lose it again, the 112.39 and this 111.53, which is as low of day, I think we're coming down to the 109s, 110 area, and potentially the channel low, and maybe the 50 MA will be roughly there at the time. Look here, the 50 MA was a lot of resistance here, roughly support here with a little bit of time below. Same thing again here. That to me would be the targeting area. I think the kind of quote-unquote worst-case scenario here for Apple would be basically a $10, $11 move down to fill the gap to the 105.44, where it would probably set up to me as a long. You can see the moves down here. Apple likes to fill gaps. This to me would be the max downside target in my view. On the contrary, if Apple were to clear the high of day of Friday, 114.80, then I think that this 119.75 to 120 area is in play. So I like either long over the Friday high of day, the 114.80, or short below this roughly 112.39, 112.39 to 111.55. If you lose that low of day, I think that the move continues lower. Facebook had some news out on Friday. They overestimated their viewing metrics. So I think the street was a little bit quick to dismiss this. Keep in mind, we basically got a backside of the regression line, a progression line move. This was basically a move back up to the after hours highs. And this basically has a bit of a lower high here and pulled back. So I'm going to keep it real simple. Keep in mind that Facebook likes to do this where it kind of chops after earnings and then pulls back to the trend line. This was also a gap fill. I don't know if it's going to be quite as dramatic this time, but this also, by the way, was a 61.8, I believe, of this range. So if this were to pull back, I mean, I think this area here, the 120.79 to 117.59, could be, I know it seems far, but it could be in play. Listen, the 200 MA here has been a very important play. We haven't had a test in a while. The 100 MA has also been very important. So the 100 MA lines up roughly around here. I don't know where it'll be when if and when this does come down, but I'll say this. This was the high here for the earnings play. Anything below 128.33 to me is vulnerable. If you can get back up above that high, which is also above the, this was 128.60. If you can get back up above those highs, I think it'll fill the gap, and it'll be interesting to see if it fills and then pulls back. If you lose the low of day here of Friday, which is 127.30, then I think we're getting at least a 50 MA test here, roughly around 125, and potentially that 50% fib move down into the 120s and maybe as far as the 117s. So, yeah, I mean, there are some levels in between here and there, 122s, but anything really below these lows, below these highs here on Friday's high, the 10-day also, to me is a little bit more vulnerable. So, yeah, that's Facebook. Twitter. So Twitter had they didn't get a bid, but it is widely understood that a bid is, I guess, on the way from either Salesforce.com or from the Google. This is a big move. This would constitute, in my view, a professional gap. It did come on news, though, not on earnings or anything specific to the company other than a potential takeover. I'll keep it really simple. The breakout here was 21.10. The low of day here was 21.11. If you're long, that is your stop. Anything below here is a GTFO or a right or right out short. My guess is that this is probably just going to chop for a few days. If we go into the weekly chart, though, this is looking a lot better. Look where the real breakdown took place below the 50-week MA. Here, it couldn't get above, struggled here, and now firmly through it. So, yeah, I mean, this to me looks like it's likely going to come back up and retest these 29s, potentially even the 37s. All right, so here's the scoop. What would the takeout price of Twitter be? Pre-market, this priced at 26. I would not be into tendering shares at that price. I think that they will at the very least have to do something inside the IPO range, which is close to the $40 mark. The problem is, and the real breakdown really took place here around the 45s, 46s. This was like kind of this swing low here, the 45s. The problem is that the Wall Street is using the kind of LinkedIn model, and that is only pricing it in at around 25, 26. I don't know that Twitter will be so easy to get shareholder approval at that price. And the risk they run is that these companies walk away and this becomes a Yahoo. Remember Microsoft Yahoo? They had made a bid, and then once Yahoo rejected it, which was also a co-founder at the time, Jerry Yang was the CEO. The stock really never looked back for years. It was down. So, and now you have a founder again with Dorsey. They might not take the bid. So it's a little bit iffy. I'm gonna just keep it simple. Anything above 2110 to me is still long. Back below, it was just smoke and mirrors, and maybe the Wall Street is sniffing out that the deal isn't going to be taken. All right, let's get back into a more normal time frame. Another big one in the news was Wells Fargo. That CEO really was awful. He is by no means, he's no Jamie Dimon. He's not even his predecessor. This was like a head and shoulders breakdown, a big rounded top. Below the 200 here is vulnerable. This was like a failed check back. It's just a sloppy pattern. I think that listen, as long as these lows hold 45.28-ish, it's quote unquote okay. But I think if this were to really break here, you could get a good flush. I know nobody is talking about this even being possible, but it could get down to a 50% fib. I mean, it is possible, down even as far as the 33s, where I would be a buyer. But I think that this stock, this was the day. I think usually these companies tend to rally after they've had congressional hearings, and you're below those lows. So this area, these 45s, really need to hold, or this is probably going to get a flush, maybe as much as at least $6. This could be down to the 40s, just double up that range. So that's what I'm thinking with Wells Fargo. JP Morgan, the aforementioned Jamie Dimon, a lot better. Breaking the down pattern, 50 MA test basically held. Anything above 66.20, which was this failed head and shoulders pattern, is okay. In my view, this probably will retest, in my view, the old all-time high, particularly if, the Fed is going to start moving. I think it'll probably rally into December with the fear of the Fed raising rates. So I like JPM on pullbacks. Morgan Stanley is really getting a little into where the breakdown area was going. I think it could maybe see 33s, but particularly if it broke out of this range, I think there's a quick play over 32.37 for a move up to the 33s. But this area to me, look where these old supports were in the 33s. This is really where the breakdown and the failed checkback took place. Given the fact that this came up from 21s, probably a good area to kind of start booking some profits into Morgan Stanley. Amazon just beasting. I did if you go from this high to this low, I think so. I did a 1.618 fib extension. That takes you up to 833.91. That's also roughly the backside of this kind of old up channel line. We're into the 800s from this stock, down from, basically up in a straight line from 474. This is playing for the last few points, in my view. I think you got to kind of start taking some profits on rallies. So I think Amazon could be up a little bit more, but it's getting a little long in the we're getting close to the price target. They do have earnings coming up. The ideal scenario would be for this to get the price achievement, then have some kind of a large pullback. I don't know if we're going to get all the way down to the 600s, but there is a gap fill down there. This was really where the breakout took place. I don't know if you get the full pullback, but I do think that there may be a larger pullback in Amazon after it gets the 1.618, which I've been saying it would get to for a while. Listen, it's possible it overshoots. Maybe they split the stock and it gets to 1,000. Who knows? But I'm still bullish on the stock as long as it holds the 50 MA. I still think 50 MA tests are viable, but we're getting close to the price achievement of the 1.618, which I drew out a while back. Netflix is just in the range, choppy to me. If you draw in kind of like a lateral range, I don't know, from here, and then, kind of like down here, you're just pinging between these areas. So that's my view. Netflix needs to clear the 200 MA. If it can do that, then I think it is to the upside. This area is very key. If you lose these 3-day consolidation lows, this is an important hold. The 93s, remember these were earnings gap lows, 92.38 to 93.55. If you lose this low here, I think that this could fill the gap to the 87s. If you can take out the 200 MA, then I think we could fill up to the 108s. So 200 MA is key. Google, I said I thought this thing would make all-time highs. It pulled back, basically held here, and is up. If you're looking for an immediate trade in Google, let me zoom out to a longer-term time frame. I do think that this will eventually see the channel high, because that's just kind of how Google rolls. It's had a very long consolidation into this range, and it is starting to break out. 9-month daily. Let's keep it simple. You had a big move up, a consolidation day. Anything above that high of day, the 817s, 819s, is higher. Anything below this low, this 812.73, could be a quote-unquote right or right out short for a day trade for probably, a few points. But I think that this is eventually going to resolve higher. It's already kind of doing that. This will be a little bit market dependent, though. Keep in mind, this already moved up from 783 to basically to close to 820. So I wouldn't mind it even kind of looking above, pulling back mid-range here, finding some footing, and then kind of going. But this, to me, this pattern looks good, and I like pullbacks in Google. Speaking of breakouts, this PayPal is looking okay to me. This broke out over the kind of the downtrend here and now pulled back and is kind of hovering here. As long as it holds these lows, this 39.53-ish area, it's okay long. If it were to lose this area, I think there would be a pullback to like this 50 and 100 MA area. These 41s have been trouble for a while. I actually talked about selling this in real time on the stream at 41.10. If anyone, the high of day here was 41.14. It has pulled back a little. I've used the pullback to sell some out of the money puts down into this region. Longer term, I think that this stock, the 200 MA has held. I think that this is going to eventually get a 1.618 fib extension up to 46s. And the channel top. I've also for a long time said that I think PayPal could be a buyout candidate. I think you'll just wake up one day and this thing will be up ginormously. It's a great company, great processing. That's the way that, they also have a deal now with Visa and MasterCard, which should be good for their earnings. I think originally it wasn't taken as so positively. This was a 61.8, by the way, of the range, and this is where I talked about buying back in. It was retested again. This looks like the classic W pattern, right? I mean, I think that the stock is going to resolve higher. It's, yes, profit-taking here, and it needs to kind of break out again. Drawing a little trend line. It kind of needs to clear, but I think that this will eventually, it may get a little squirrely or whatever, but I like this as a buy the dips. It's actually one of my favorite ideas going forward. Nike. Everyone hates Nike, right? This was a darling of the market, and now it's kind of hated. This is pulling back quite a bit. My hoping and praying is that this dumps on earnings and does something like get down to below $50 again to set up for a long. There's back to school. I mean, this should be doing well. I think there's a lot of talk that Adidas is doing better. Nike in November has a self-lacing light-up shoe coming out that I can't wait to buy, and I think every kid in America is going to want. So I think that the best thing that can happen here is a shake and bake where this thing gets like finally washed out. I don't know if we're going to get our wishes there, but the 200 MA here has been key. If this does have like a gap up on earnings past the 200 MA, I think it could be a gap and go and continue. So I either want this long over the 200 MA or back down kind of close to these 50s or even 48s. So I'm going to be the second mouse on their earnings. I either want to buy it on momentum, back up over the 200, or on a dump down lower. But I do think that this is going to be big. I sold some puts in Skechers. It got my price target achievement here. I was talking about 2156 to 2078, and it has now bounced nicely. Yeah, so I'm technically long a little Skechers. It stalled at the 10-day. If we were to lose these lows, I might GTFO. It would be a shortly lived play. I don't think that this is down a hell of a lot from the high. It's down a hell of a lot from here. This could be like a private equity takeout play or something at some point. I'm not a huge fan of Skechers or their products. They don't fit me well. I'm more of a New Balance type of a guy. Adidas maybe, or even Nike. I have a collection of Air Jordans that I don't want to say it rivals Mark Wahlberg's, but I have quite a bit of them. This could, if this loses here, it could get all the way down to the 14s, 15s, but to me, I think that this is more of a buy into the dips now than it is a sell. FedEx. One of the reasons that I've been kind of bullish also on Amazon is this FedEx. They reported earnings. This was the classic inverse head and shoulders pattern. This is the transports, Dow theorist. This is bullish, man. This is a professional gap if I've basically ever seen one. If the market gets squirrely, maybe this pulls back to retest the breakout, but this is a gap and hold and even go kind of over the breakout. This really should see the old all-time high again. If the market gets squirrely and this does fill the gap, based on their earnings, I would be an interested buyer. So I like it as long as it's over this 174.32, which it still is, or near kind of this 168s. I'll be, if this does pull back, selling some puts into this region. I don't know if this is going to fill the gap so fast. I think it looks like it wants to go higher. So this is a bullish pattern. I'm unfortunately not in it, but might be soon. I might sell some out of the money puts, particularly if we get some IV spikes. Twilio. I can't imagine. I get so many questions on this stock. I talked about this being the area to sell. It pulled back kind of hard. It's back up into there. It had a bit of a topping tail reversal. The ideal scenario for Twilio would be for this to be up early on like Monday, top out at 66.48, and then go lower to set out for a right or right out short. That would be kind of a secure high play. I've never been really that interested in the trade again. After that, I did, however, say that it was a buy at the time. If you go back a few videos, that I thought it would go higher once it broke this downtrend, and it did. Listen, this thing could keep going. I honestly, I have no real view on this stock anymore. I thought that it would double the range here. It did it. That was kind of it for me with the trade. Now I would be maybe interested in the right or right out short. Listen, it could continue longer, but it'll do it without me. I think the more easy money. Listen, maybe it gets to 100, who knows? But in my view, the easy money is kind of made. Acacia, ACIA, I talked about this getting up here. I think I had said 125 at the time. It got to 124.90, and then I sort of disavowed the trade. I said it wasn't a short. I got trolled a little because it did pull back, but I said that I thought this would just be choppy in range. It went back and made an old all-time high. Those same trolls kind of shut their mouths although they never really apologized. This is just bull flagging and kind of hanging out high and tight, like I said it would. I shouldn't even say that tight, but it's hanging out in this range. If you can break this range now to the upside, it'll probably continue. But if you lose this low, this 100 area, this could be a lookout. I mean, this could really come down. I don't want to say that it's a head and shoulders play, but I am not long Acacia. It would not. I think, like I said, the easy money. This is when I said that I thought the trade was over, and I don't like to look back on these. This could just stay stubborn. It could continue higher. For me, this is now gambling, frankly. I'll end on Tesla. Tesla broke the 200. That's when the trade had to be kind of disavowed. It held the channel here roughly, but has broken. I think that this could continue bouncing to retest the channel, the backside of the channel, but you have a lot of resistance now. The 200, the 50, the 100, and the 200. This area to me would be a good right or right out short. That was roughly where it held in the after hours too, around the 216s. I don't love playing Tesla short because I've talked about it being a poorly distributed stock with high, insider ownership and heavy short interest. But I would like it here for a row play, at least for a day trade with a kind of a tight stop. I think that the shorts are just kind of hanging out in this because they know they have to issue stock for the Solar City deal. So once that kind of is out of the way, then I think the stock will be more clear for. Then could be more clear for takeoff, but until then, it's going to be tough, or a tough road to hoe. I actually like selling strangles, out of the money puts and out of the money calls. Anyway, I'll end it there. That's my story. I'm sticking to it. If you're not following me on Twitter, my handle is @JustinPulitzer. And if you like this video, hit the thumbs up and be sure to hit the subscribe button. There's also a new feature here where you can kind of click on both on Twitter and also here to get notifications. So I highly suggest doing that. You'll get notifications when I put up new videos. Anyhow, have a great rest of your weekend and cheers.